Can anyone see my chart just fine? Perfect. Okay. So we're going to go ahead and talk about strategy today, strategies that I pretty much put into 2.0, and we're going to go ahead and look at the main features that we pretty much added. So not there has been a substantial change of how much features we've added on to Spice Algo 2.0, but the main important ones that I did add on is Spice Levels, Spice Cloud, and then also the addition of the 9 EMA Cloud and the Spice Matrix, which is located on the right side. So, and the reason why I wanted to come out with an update like this is because, without the algorithms extra features, if I were to just stick with everything else that we existingly have, um, it works in a great way of finding, where to buy, where to sell, but where do I know where exactly price action can potentially hit? Where are my, danger zones, and where is a chance that price action would have to rebound? Because the auto resistance and support lines, they work pretty well. You have a good understanding of where price action would rebound or have a support at, but it does not give you a general understanding of where exactly price action could go. So that's why I added in addition to add the 9 EMA, Spice Cloud, and Spice Levels. So I'm going to go ahead and take off Spice Resistance and Support. I'm going to take off Spice Trend. I'm going to go ahead and go through in Confluence just the 9 EMA, Cloud, and the Spice Levels just to give you guys an understanding of how you would typically use it. So on the Tesla 3-minute chart, let's see if I could find a good example to show you. Probably this trend right here. So if I'm looking at this trend, orange bars, right, they were silver. There was a problem where silver bars were very hard to identify, so I went ahead and programmed them back into orange, which was the original color when Spice Algo 1.0 came out. So orange reversal bars, and you could kind of tell when you zoom into it that it has a green outline. That means it's a bullish reversal off of a sell signal, which means if a sell signal were to come in and an orange bar were to come in, you could assume that it is a bullish candle, that it's likely a green candle. And how it's supposed to work is it signals a reversal whenever price action has a chance of turning to the other side. So if we're in a downtrend and it prints a silver bar, you could assume that price action will soon enough have to go back into green, which is eventually what happened. So the 9 EMA cloud, the reason why I say cloud is because it's a regular exponential moving average is flat. This is a cloud-like figure, which means that it's using a combination of multiple EMAs. The EMAs that I programmed into this, just so you know, is going to be the 8 EMA, the 9, and the 10. Why I chose those three is because some people will get very freaked out when they see price action go above of a moving average. A cloud, it's a lot harder for you to get faked out because now it's just in the cloud. It's not printing below it or above it. It has a better confirmation to let you know, hey, the general moving average within this time frame is going to be okay. Price action is still holding pretty well as a support or a resistance. So how I like to use the 9 EMA, you'll notice a shade of color difference. The lighter the green, it is in an uptrend. The darker the green, it is in a downtrend. That's how we could decipher the color differences between the EMA cloud. But essentially, what happens is price action defaulted, sell signal pretty much came all the way down. Brian, where can I spot the potential reversal? Well, what you could do is you could see one orange bars, right? That's going to give you a nice little signal, let you know, hey, a reversal's coming. But you want to use the 9 EMA as confirmation of that break of trend. So this is the break of the trend, right? You can see that the 9 EMA now holds price action above as a support, and you can generally tell just by looking at this chart that the 9 EMA is now holding price action to the top. How the Spice Cloud works is it acts as kind of like a Bollinger Band, not really a Bollinger Band because Bollinger Bands are flat and they just have a general price action, while this holds a cloud. So if you see a rejection, right, you see like a hammer or a shooting star, meaning that the opposite direction of the trend has a long tail, meaning people are now buying the trend, right? That gives me an indication just off looking at the candle patterns. Hey, looks like possibly something might happen. Cool. Is there an orange bar that prints? Yes, there is. Buy signal comes in. Cool. This gives me a clear confirmation that the Spice Cloud pretty much rejected the price action. I now have the 9 EMA riding the price action as a support, and now I could test another level. So with spice levels on here, you could see that there's a gray dotted line within this area, and this helps me understand. Hey, there could be some overhead resistance within this area. Let me go ahead and turn off pivots so you can see clear. But there's gray dotted lines that help me understand. Hey, within this certain time frame, within the period of times, there was a rough rejection or a rough support at this level. So you could already see one rejection, two rejection, three rejections, four rejections. But Brian, should I take profit here? Yeah, you can take profit in this area. You could take your first take profit. You probably wouldn't have made so much profit because you've only went from 792 all the way to 796. That's actually a pretty good gain. But the best thing to do is to use your other indicator as confluence. So the 9 EMA really helps you out to understand the strength and validity of the price action, because eventually price action doesn't actually start to ignite or cross the EMA cloud until this point. So realistically, there's so many ways you can go about this. You could take profit at this level, right? This is now a level because it's two level. I mean, it's practically a zone because it's two levels in one certain area. So this is a zone, right? You could pretty much assume that this area in between is a zone, and this is where price action would reject or it would rise into an uptrend. So as soon as price action hit this spot, you can take profit. And you could scalp into the play, maybe re-enter in off the break of off the break of the level, and enter in right on here. So if I were to enter in on this break, I could go on to the next level and take profit. So you could take a look at this and say, okay, well, looks like it technically hit the top of this band, Spice Cloud, and it's letting me know I could probably take profit in this area because it did technically reject off the top level. And how I know this is it completely rejected, it held support, it was consolidating here, but eventually what happens, the band starts to tighten. And I want everyone to know this, when Spice Cloud tightens, it's letting you know that there is going to be an abrupt price action change, which means when it starts to contract, that's what I mean. When price action starts to contract, I'm going to go ahead and turn the spice levels off so you can tell. When the cloud contracts, it acts very similar to Bollinger Bands. When the price action contracts, what happens is there's an eruption of price action. What happens is the price automatically falls and rides back down. But you have to consider the clouds kind of like a danger zone, kind of like a freeway where you can't hit the other lanes. If it hits the lanes, you have to swerve back into your lane, and that's exactly what happens. You also have the 9 EMA. I mean, you have the cloud help this price action as a support, and eventually what happens is it does the exact same thing. It would practically hit another zone. But if I were to find, okay, well, it didn't actually touch the band, how do I know where a rejection is? That's where spice levels would come in, or resistance and support. You'll know right away if there's a potential price action within the zone. Right over here, it just looks like price action is just going to consolidate, which is what happened within this channel. So price action pretty much consolidated around this zone. And you'll know that when you're watching the chart throughout the time, you'll be like, okay, I kind of want to wait to see if there's a break of trend. So right over here, this is technically the break of trend because it just played flat the whole time. I want to see within this range, where do I see a price break happen? Right above here, you have the 9 EMA holding this price action as a support, and you could take profits whenever you hit a certain level of rejection. So you could take profit here. You could take profit here because eventually what happens is it touches the no danger zone and it goes flat and diverges away from the cloud, hits the top of this level, and we don't know where it's going to go on to the next day. My guess is that because it's diverging, likely Tesla will likely try to rebound to this level or try to reject and go higher. So that's just one example of what you could do and some strategies that you can use as confluence with the other indicators. But I'll go ahead and break down a different play. This little trend here, 9 EMA held, the cloud held price action straight throughout, right? But Brian, what do I do with this buy signal? You could technically filter it out because one, I want to look for confirmation. So I would not enter in on this buy signal. I would enter in on a confirmation on the print above the cloud. So this is my entry, potential entry, and I want to see a confirmation that it holds the support. So it does, it holds the support, and eventually rides all the way down. With this one, it breaks, but I don't see a candle that prints above the EMA for a reversal to make this buy signal really make any sense. But basically, what happens is it rejects, it holds the cloud all the way down, and eventually it hit a pivot point to where it just rejects up in price. Use the orange bars to give you an idea of, hey, looks like something could happen. Just be careful as a warning that, hey, we're touching an area where it could obviously try to reverse, but you can have a clear indication just by using the cloud. Hey, it rejected, nice little shooting star. Same thing here, it rejected. If I were to play this downtrend, and scalp, I'm going to look for dojis, which means I'm going to look for tailing on both sides, or I'm going to look for a shooting star or a hammer. This is a hammer, technically, because you have price action like a tail-like figure like this that pushes the price all the way back up. And what happens is price action rejects, rides all the way up. You could take profit at any point in this time as a level, and you could leave the rest of it to run until you see another rejection point and divergence of the cloud, which is exactly what happens. It runs the trend of the 9 EMA cloud, breaks down, sells off, hits the bottom of the cloud again. So that's one example. Let's go take a look at a longer term effect of how you could use it for a swing trading approach. Let's go to the 1 hour, see if this is a valid play. Yeah, same exact thing. So sell signal came in. You have the 9 EMA cloud holding the price action all the way down, right? It's a dark green cloud, meaning price action is within a vicinity of a bearish trend, and you could pretty much take profits at any point within these levels. But eventually, like I said, if it holds within the band, eventually price action will reject, and it would ride straight back into equilibrium. Same thing here. Rejects. At this point, price action goes all the way back up. So that's pretty much how you can use the cloud as an extra confirmation tool to help you find certain trends. And it's a great way for you to understand where is my no-go zone, where is my out of bounds, where do I need to take profit? Because if you don't identify this and you were to go greedy, right, you would automatically lose your gains if you were to hold this. Yeah, you would make some gains, but like you would give up some, right? You have to see these cues where you could see some rejection. This was a clear one, ignited past the 9 EMA, buy signal came in, a doji printed above the 9 EMA, which is a confirmation that I need to get out of the trade and take profits if I were to take this sell signal. And you could even use it to actually filter out signals that you're not comfortable with. If you know that you're fighting a trend, look at the 9 EMA. Is it still on your side? Yeah, it is. It is on my side, and now I know, hey, I could still hold this sell signal all the way straight down, but I know where to take profits using the levels, right? I could take profits as soon as it hits this level, or this level, or this level. They're natural take profit areas because that's where price action typically reversed within the certain time frames. But that's what the levels are for. They're there to help you understand where can I take profits, or how high or how low can price actually go within the security. So let's go take a look at a different stock. Let's look at Facebook. Really good example right here. Immediately. So same thing. You could see that there's some rejection, right, off the price action. Because it's just 3 straight green candles, right? And in the videos that we give you guys to learn about price action, we call this the 3 bull action, which means there's 3 green candles, simplifying that there's a reversal, right? That's 3 green candles. Eventually what happens, buy signal comes in, and then now you have a confirmation. Remember I told you guys when you take a buy signal, you could take it right away, but what I like to do is I want to confirm, hey, is this price action correct, right? I want to give myself that extra confidence. Buy signal comes in, ignites past EMA cloud, and then now there's a candle that prints above the cloud, and I could go along, let the 9 EMA hold me all the way to the top, until it eventually reverses at this point. So if you were to play off this strategy, you could sell once the sell signals come in, or what you can do, right, is once you see rejections at the top levels, right, if you see that there's no more levels left at that point, probably a good indication, probably consider taking profit soon, because there's going to be a massive reversal. Because looking at this chart, there is absolutely no levels left above this price action. So holding above the last level, you'd technically be greedy at that point, right? because now there's no historical data that can claim that Facebook can go for another high. But I would consider taking profit, especially at a big uptrend like this after a certain swing period. But you could use this to gauge areas where you could take profit using the levels. So eventually, what happens here? Buy signal comes in, sell signal comes in. But Brian, should I have taken the sell signal to go short? You can't, but keep in mind you're fighting a level. So a level can act as a resistance and a support because what happens is it rejects this level and it goes all the way up. That's why I say wait for confirmation because confirmation is key, right? The sell signals and buy signals, they will come in if the conditions are met, but they cannot understand where potential previous price action can be, right? That's why we have these other tools to support the algorithm to help us understand where price action could and could not go, right? The cloud is meant to help you find where the danger zones are. The EMA cloud is supposed to help you find out where the earliest reversals are, and give you a guidance of how well we can ride these support levels. Because eventually it breaks, but there's no confirmation candle that comes in that says, hey, it's still bearish. If there is a sell signal that came in and there's a red candle that prints again below the cloud, I know right away I'm out of the trade. I'm going to take my profits. I'm going to let it go, right? Because that's eventually what happens here. Sell signal comes in, and then the confirmation candle comes in. And then once people see that confirmation, I guarantee you other technical traders are going to see that and they're going to say, okay, time for me to get out. Causes a nice sell off all the way to the bottom of the cloud again and at this level. So you can use these levels to help you understand where can price action go. If I were to take this trade, I would probably take profit here because I have no hands, or I could take profit here, right? Every single level I'm going to consider to try to take some profit because if I don't know how low these things can go, right? You might get scared out. You're going to hold, you're going to hit this part of the price action, right? And you're probably going to get flipped out because you're like, oh my gosh, now I'm nearly at equilibrium. I'm nearly at break even if I were to enter in on this trade, right? So that's one way you could do it. Or again, right? Trust your indicators. That's what the cloud is for. It bends, but it doesn't break. Price action comes up, but there's no confirmation of another buy signal that tells me, hey, I probably should get out of the trade. There's no confirmation because what happens is it rejects the top of this level, and then reversal bars come right in immediately because once it hits this top, people are not comfortable with the price. They're going to sell off. And what happens is orange reversal bars. Now you have the 9 EMA cloud holding resistance at that level, and it holds the price all the way down. And remember how I told you guys when you see some doji actions and you see some rough divergence meaning there's some separation between the bands and price action, right? Because now this is 3 candles in where I see a possible divergence. I don't see any I don't see any point of I don't see any point of holding this at this point because now I'm like, okay, I'm just waiting for the price action to reverse. Eventually, what happens? It does. It reverses all the way back, right? Because now we see a divergence of the bands. This is fine because now you have a consistent trend holding the band down. But if I see any divergence, meaning I see any separation of the price action and the bands, I'm taking profit. I'm going to let go, right? I'm going to take my profit and go. Does anyone have any questions on this so far before I continue? Anyone at all? What's up, Bernie? Exactly. It just helps you understand. Yeah, because think about moving averages. They're tracking data from previous days. So if it's like a shorter time frame, right? It's like it's like the week data, right? So it's like nine within the past 9 days, right? This information is very important for us to know because we could track short term pricing, um, and it helps us understand within the past 9 days what is the averages of Facebook within that time period. So when you see a reversal, that means historically when it hits this price action would reverse. That's exactly what happens. There's now a change of color, and you now see confirmation of a printed candle above the cloud. I mean the EMA cloud. I'm sorry, everything is a cloud right now, but the EMA cloud and price action goes directly above, hits the top of this level, right? It still rides the top of this level, but you could really just use these levels to take profit, right? This is a take profit area, take profit area, take profit area, and eventually what happens? Remember I told you guys Spice Cloud acts kind of like a Bollinger Band in the sense that when it contracts, you better expect some sort of price action coming very soon. Because what happens is when they contract, there's going to be a price explosion. And there was a slight price explosion, like right here, but it still was not strong enough. But it's supposed to help you understand when you see a contraction of the bands, just know you're in a range and just know price action can either go really high or really low. Let me see if I can find another example of that. Right here. So contracts, right? This is very tight. What happens? Explodes for another $7 move down, right? So this can give you a really good confirmation to understand, look, something's about to happen, right? I better prepare myself for an abrupt price reversal or a continuation of a trend. So just keep that in mind when you're using these tools that they're just here to support you and understanding where price action can go. Because the algorithm, right, the buy and sell signals, they're going to come in regardless, right? And sometimes they'll get faked out from manipulation of price. So this right here, we have crazy tails like this. This is market movers, market makers making their moves, right? They're probably selling positions. They're catching stop losses to make the price action go their way because they have longer term bets. But if you're wondering how these crazy tails come in, it's because of a very smart money person or people decided to sell off, and it causes tails like this. And to be honest with you, that causes right issues with Spice Algo. It's going to give you these buy and sell signals that just come in out of nowhere because that's just how it is, right? We can't do anything against manipulation, but what we can do is use our other tools to help us understand. Hey, yes, price did bend, but did it break? Is there still a chance for this sell signal that I entered in on? Yeah, there is because the 9 EMA cloud's still holding you very tight. You got the level right here holding you as a support, and as a resistance, and you could ride the trend straight down until you see a divergence of price action. But honestly, I probably would have taken profit if I saw this buy signal come in because you just want to be safe. But the best thing to do is to trust your tools. 9 EMA cloud, it held it all the way down. And then until you see a really big confirmation candle, then yeah, go ahead and take the profit. Probably not any profit. You probably would have broken even if it printed above in this area. But it's supposed to help you find out, right? The safer you are, the better, right? It's just by my strategy, how I like to implement it. If I see any divergence of price action away from the cloud, I'm out because I know I'm not in a trend anymore, right? I'm fighting some price action, probably an RSI cool down, and you could have just re-entered in on this sell signal confirmation or the sell signal immediately, or the reversal bars because now you see a rejection off this level. You could enter in on the orange bars, you could enter in on the sell signals, and you could ride the trend all the way down until you see another divergence of the band all the way up, right? You could take profit at any point in time or take profit at the spice level. It is completely up to you. This update is supposed to substantially help your trading because it's supposed to help you understand where price action could go, right? I believe this example is what I put up on the guide, but price action ignites, reversal bars print. Now you have a print above the EMA cloud. You could ride this trend, take profit here. Or if you were to trust your tools, the fact that you have some rejection of the bands, then you could hold it all the way to the top of the next level, which is right there, which is a 262 to 273 move. Again, we don't know these things, right? These things are going to come in. You're not going to see the bigger picture, but I'm just giving you guys really standard strategies that you can use to make your trading life easier just by utilizing these levels. I could easily come in, take this scalp, 262 to 269. I'm happy. I'll take that profit, right? But who knows, right? Maybe you're like, oh, should I sell? Should I not? If I see any dojis, right, and if I see any, like I said, right, this is a good strategy. I know. If I see any divergence of the cloud and separation to the price action, I'm taking my profit. So how high does this go? If I were to take profit there, 262 to 267. I don't know about you guys. That's a huge movement, especially in options, especially if you're trading, if you're day trading, that's a huge movement. Or if you're, day trading common stock, that's a good thing to know. Does anyone have any tickers you would like me to point out or take a look at using this strategy? I don't bite. AMD, of course. Okay, I'll take a look at AMD and then I'll take a look at Apple. All right. Yeah, this is a good example too, right? Filtering signals that got manipulated by market maker movement. This is a great example. So, all right, no algorithm's perfect. I'm going to say that again, right? If I could predict every single reversal, we would all be rich by now. Of course, it's not possible. So I have to be really realistic with you guys, right? As soon as I see a reversal like this, where I see printed candles and conditions above the EMA cloud, I'm going to go long, right? Because at least I know I have historical data on my side to give me as a support, right? So I'm going to take a look at this trend, right? I'm going to see this, take profit at the top of the band, or if I was, to be really sure, I'll take profit as soon as I see a divergence, right? Take profit there, 90 to 93, holds the cloud. But again, right? If you're trusting all your indicators, you could do this. You could ride the EMA all the way to the top until you see a rough rejection of a level. You probably won't be able to sell off here because this happens within seconds. But let's say we just sell right over here. Once we see a rough rejection like this, if you see anything like this, like a crazy tail going on and opposite sides, this is still considered a doji because there's tailing on both sides of the action. If I see anything like this, all right, if I see anything like this where I see a huge tail on both sides and a small body, I'm getting out because I'm going to expect that a market maker is making a move. And exactly what happened. Price action sold all the way down, right? This is for swing trading on the 1 hour chart, just giving you guys an idea because I feel like a lot of members here would benefit from learning this because swing trading is great, especially if you're working 9 to 5. So if I see any rejection like this within the day, right, I'm going to take profit, I'm going to get out, and I'll go short if I see a confirmation, right? Sell signal comes in, there's no confirmation, so I'm not in it yet, but then I see a confirmation again where it prints below again, right? I'm going to enter in possibly right here, and I'm going to go short all the way till I see a divergence of price, probably right here. And then if I see a continuation, right? If I see a continuation all the way down, right? I could re-enter. But again, trust your levels, right? That's why you have these levels here. If you see some consolidation, right? As long as I don't see price action escape this top level, then I'm still good for the trade, right? Because now I know there's a resistance for me at this point. That's what the levels are made for. They act as resistance and support lines. So if I'm looking at this trade, I'm not gonna take profit because now I know where my level is. I know where price action is going to help me out because if it does break, right? If it does break, kind of like this right here, right? If it does break and it ignites past the EMA cloud, then I'm going to exit. So let's say theoretically I'm not perfect, right? And I take profit as soon as it goes all the way here. Let's assume price action escapes and there's a candle right here. That's still a good gain. 94 to 90 on a short. That's really big profits, especially on a swing trade that only lasted what 2 days. Was not. It's really good. But if you wanted to take advantage of again, right, using all your tools as confluence, you could have just rode that whole trend down because you have the EMA cloud holding your trade as a resistance straight down, right? So as soon as it goes straight down, right, and as soon as I see a reversal, right, as soon as I see a reversal like this, where I see confirmation of a buy and then there's a reversal change of the trend, yeah, you could probably take profit here as well too if you really want to be sure. Oh, oops, right here, from 94 all the way to 87. So does everyone understand the strength? I mean, like how big of an update this is? Because you now have the chance to understand where price action could potentially reverse using clouds and price action. Does anyone have any questions so far? Yes, right here. hmm Yeah, yeah, exactly. Because because the cloud is still trending down, right? This band is still trending down. It's just that if price action were to now, let's say for example, because now you have an orange cloud, I mean orange candle that you're now fighting, right? If I'm looking at this right here, I'm going to see, okay, I need to see if it's going to print above the 9 EMA. Because if it does, it doesn't matter how low this cloud can get because price action can be straight in the middle and it will still be in. I mean, theoretically, what happens is, let's say for example, it does reverse course. You're still in safety zone. The in between the cloud, you're technically in equilibrium. Anything over here is valid. So in between the cloud is a valid play because price action can go straight above. It's just that I would use the 9 EMA to help me gauge, do I still have a trending resistance that's helping me play this, play this trend all the way down? Because the bands are not meant to help you understand how low or how high price action can go. They can only help you understand when a huge change of price action is going to happen, like when it contracts and then it explodes like this, right? It's only supposed to help you understand the danger zones, right? It's because as soon as you hit a danger zone and you escape like this, you better expect price action to come back and diverge away from the top or bottom cloud. That's all. That's what it's supposed to do. But you can technically, yeah, look at this as a way. When you see something like this where it's just trending straight down, you could possibly see that. But the best way to look at it is you got to see the direct price action, not the cloud, because the price action will always let you know. If there's an orange reversal bar, and then if you see a confirmation of a buy signal that comes in outside of the cloud, or right, you see a break of the cloud and there's still an orange reversal bar, I'm going to take profit and go because at that point now I know, look, it completely is going to reverse on me. I would have taken profit here, and I probably would have re-entered in as soon as it rejected and did it again all the way down, right? Because now I know the 9 EMA cloud is holding price action down. Mm-hmm. Exactly. So you could do that. So I'm not sure if they can pick up your guys' voice feedback, but basically what Blake said, everyone in this recording, you can trim and take profits in this area, and you could hold your other contracts down until you see another reversal print. So that's one way you could do it. But the levels are basically telling me, if because I'm looking at this play, if I'm looking at this logically by the minute, I'm going to look at this. I'm going to say, oh my gosh, it rejected this level. The next level of resistance is up here. So I mean, I'm not going to lose this trade if I let it develop all the way to the top for me, right? I'm going to go ahead and possibly trim, exit my position, wait for reentry after I see that it completely breaks down and it rejects like this right here, and you could have re-entered, done the same thing until it rejects off the bottom level. Because this is the bottom level. I don't see any levels below this. This is where that last level is. Now I know where the potential take profit areas are. It's going to be right here. So you have to use like your tools, and over time you're going to understand how to use them better. It's just that I've studied it for like 2 weeks to give a good understanding on how to teach it. But essentially you're supposed to use all your tools as confluence, right, as confirmation. Then we're going to go ahead and put in what happens if I add spice trend again, right? This is what I mean by using all your tools. Now I have spice trend, which is a double moving average that helps me understand, is am I still in a downtrend? Because remember, spice trend will let you know if it's bearish. It does. And as soon as I see, it start to squeeze and turn golden, I'm out, right? So you could use spice trend as another gauge, another confirmation to let you know, hey, the trend is still red. I still have Spice trend on my side, letting me know that the trend is still incredibly bearish. And eventually, what happens? Price action reverses. Look, it turns golden. I like to use this. As soon as I see price action print above the EMA cloud, right, and I see that there's a golden trend now, I'm going long. I'm going to take profit as soon as I see a level, right? There's a level. And what happens when it hits that top level? Rejects. And now it hits the bottom of the danger zone of this zone, and it goes flat pretty much all throughout. I probably wouldn't have taken this sell signal because I'm fighting the bands, right? I want to see confirmation of the trend happening. But let's say, for example, right, theoretically, I were to enter in, right? Yeah, I just didn't recognize it. I'll enter in. You just better be prepared to, stop loss yourself or cut your loss short just in case, because yes, it's trending down, but you're fighting a huge zone here. You're fighting a level. I want to see confirmation of a print below this level, and I want to see the band contract at least like this, where it spreads out like this, so I have some room. Because now I'm fighting a danger zone on this sell signal, and now I'm fighting a level directly below it. So you can see this level; it's right there. If I see a level here, I better see a break, right? Because what happens is sell signal comes in, rejects, and it goes all the way up. I wouldn't have taken this sell signal because I'm guessing the only reason why the sell signal came in is because it absolutely broke the trend, and that's why it pretty much came in. It pretty much forged all the conditions, right? So that's why I said the base algorithm is not perfect, but you can use tools to basically make it perfect. So what happens here? Buy signal prints. You now have the 9 EMA holding on the cloud. I'm gonna take profit as soon as I see it diverging, which is right here. So if I were to take this buy signal, right? Let's say I take it here. I take it here, and I'm gonna sell as soon as I see it diverge. 89 to 91, easy money, take profit. Again, right? You could have done this as well too, because now you don't have any levels until this top point, right? There's no other level here. I could have held this, trusted Spice Trend, trusted the 9 EMA cloud holding the price action all the way up, and I could have taken profit directly at the top of that level once it rejects 89 to 94. Make sense? I don't know. Could possibly break, right? Because this is we don't know what's going to happen on Tuesday, but you can take profit there. The spice levels are supposed to help you understand where I can take profit or where is my supports at. Where do I see these moving averages helping me out as a support level to the top? So that's one point. And now let's say for example, I were to get rid of the cloud, right? You could, it still works just as fine because you have the levels on your back. I would say like a necessary tool would probably be the levels, or if you don't want to use the levels, you could still plot regular resistance and support lines and or zones. You could customize this to your strategy at any point in time that you like. So if you wanted to, for example, I don't want the cloud, how do I remove it? Since I don't consider it like a main feature, I just consider it like an extra tool. It's going to be in style. I labeled it as 9 EMA. Click that once, it will automatically turn off, right? Same thing with every other, oh, sorry. Same thing with every other indicator. You could go ahead and turn them off and on, whatever you'd like to do. I want to make this point because I feel like this is a really big question. What do the sensitivities do? I feel like everyone just sticks to two. So after doing some very big research on the accuracy changes, right? I'm going to look at this chart with just the base algorithm. I'm going to say, okay, what about this? Shouldn't the algorithm have been smart enough to do this? Yeah, actually, you can definitely increase the accuracy 1 point above, and it will completely fix that issue. I'm going to make an announcement about this because after researching it, it makes a lot of sense. The higher the time frame, I highly suggest that you move the accuracy to 3. I'm going to make a note on this because I discovered this, after back testing heavily. I highly suggest that you increase the accuracy to 3 when you're playing on the 1 hour or the 4 hour time frame. So look at the 4 hour time frame with that 3 sensitivity. It looks a lot cleaner. These are a lot more accurate. So that's why I recommend moving the accuracy to 3 once you're playing on longer levels. Because if you were to go to 2, it's just very sensitive, right? And when you're playing, and when you're swing trading, you don't want this, right? Abrupt price action, just putting in buy and sell signals out of nowhere that are not, going to obviously go my way. I mean, the rest of this chart looks perfect, but I still don't want that chance, right? I want to give myself a chance to accurately swing trade with this algorithm. No problem. Increase the accuracy to 3. A lot of those fake signals are gone. You can accurately now swing trade however you like. This update was substantial compared to 1.2 because I completely revamped the accuracy, and I'm pretty proud to say that I increased the accuracy by 4.5% over 100 trades on SPY on the 3 minute and the 1 hour and 4 hour time frame. Huge difference. A 4% change is substantial, especially in trending and ranging markets. It's very important to know. And when you're in a ranging market, it helps to have your sensitivity bumped up because now we know unless it actually breaks, then that's when the buy signal will come in. It won't give you the perfect entry, but of course there's no such thing as a perfect entry. It's very hard to tell, but it will give you the strength of price action, right? Because I'll show you a difference. If I were to go to the level 2 sensitivity, it will get me earlier, But there's going to be some abrupt price action where the sell signals are going to come in and fake you out. We don't want that. I suggest really bumping up that sensitivity to 3. Give yourself a better chance to get a better play, right? Occasionally, you'll get this where you're just going to break even or take a small loss, but you're going to get huge winners like this, like this, like this, like this, like this, like this, like this. Story continues. Oh my god, it's amazing, right? So even with the algorithm by itself, it is still incredibly strong. Even if I didn't want to put any of these tools on here, because Tim, I know you made a comment. Wow, why are all these indicators for? It's just to help you out, get more gains, right? It's supposed to give you more confirmation. But again, you don't have to use any of these tools. I recommend them because why not? Why not make yourself more money than you could and possibly get better entries using Spice Trend? Like for example, this ignites past Spice Trend. As soon as I see a reversal like this, I'm going to enter in earlier than the buy signal, right? You could use your other tools to give you confluence to get into better positions. Because right here, rejection off the band. I could have entered in as soon as I see a confirmation of a green candle, because this is a green candle. Yes, it's printed burgundy, but it will show exactly this a reversal, and I can enter in sooner than the buy signal because the buy and sell signals they have to meet a very strict condition process before they print. I made it that way because I want to make sure that you are confident when you take these trades. I don't want to just rush into it off of just moving averages and stuff like that. That's why the buy signal printed later. It needs to meet all the conditions before it lets you know take a buy or sell. So if you're wondering how that works, that is exactly why it did not print here. Because who knows? What if it reverses, but then it goes straight back down? It can't control those things. So that's why I made sure it has to be the most strict process before a buy or sell signal can come in. But you can use other indicators as confluence. I'm going to give you again, right? Rejects off the band, diverges, and then boom, you could ride the trend all the way up, right? Let's see this with the EMA cloud because I'm sure it would give you some more support. Right over here, rejects, and then yeah, maybe you could enter in right here because now you have the EMA as a support for you, and you're riding that trend all the way up. You're going to take profit as soon as you see the top level because what happens? Top level, take profit there because what happens after it rejects that point? And you have a divergence between the top band and price action, it just goes flat and then it does sell off immediately, right? I'd rather take a gain at the top level than take a profit right over here, right? So, again, that is the explanation of the sensitivity. I hope that makes sense. The higher the sensitivity, the stricter the algorithm. I want to let everyone know that, right? If you go the higher the sensitivity, oh my goodness, it's not going to be the perfect entry, but it's safer. That's the point I'm trying to make. But I don't highly recommend you use the 4 sensitivity because it's like I'd rather have the better entry. So the 3 is kind of nice. The 3 is perfect, especially if you're swinging on longer term. The 1, oh my god, you're asking for some pain. I only recommend the 1 minute chart unless you're like you really understand price action to the T, you understand how to avoid these head fakes, and you want to get the best signals before you want to get the best reversals before anything happens, right? So if you use the 1 sensitivity, you're a maniac because you're just going to be like, oh my god, look at all this crazy buy and sell signals coming in, but it finds the best entry immediately. You'll find the entry right away. That's why I set the standard at 2 so that way it's safer. But I don't recommend the 2 sensitivity on longer time frames. I recommend now a 3 because it's actually more consistent. It's not going to get you the perfect entry like this, but it's going to get you in a safer play, and there's not going to be as much abrupt price action. You're going to get some occasionally, but overall, if you played AMD every single time and you took every single signal, you're going to be at least 79% accurate on every single swing trade. I'm pretty confident when I say that as well, too. Just look at it. Pretty insane to me, right? Um, okay, occasional loss here, but everything else looks like a dang sure win. So let's see a different ticker. Let's take a look at how does it fare with Bitcoin. Pretty dang good. I mean, this is pretty obvious. Bitcoin is trending like crazy. You're squeezing on the bands. Bitcoin has been just bullish pretty much overall. Sorry, this is the market cap. What am I doing? Sorry, everyone. Okay, pretty well. But I believe for Bitcoin, it just when you're trending in such a bullish state, that like you just kind of want to take the buy signals and not the sell signals right now. I mean, right? I'm not saying you need to short Bitcoin, but overall Bitcoin has been in an uptrend, pretty crazy one. So I don't think it's going to stop. I probably wouldn't have shorted Bitcoin at any point. I probably would just went full bull and just scalped every single buy signal. But I have not checked if oh, actually, yeah, it does. Okay, so it looks like Bitcoin is actually okay with the two sensitivity. The three is, I would say, that would work just on common stock because this is a different market, right? Totally different market. I need to back test and see if the four sensitivity would work better. You'll know just by testing it, right? You could back test. You could take a look at the stock when you're deciding to take swing trades. You could test the validity of the sensitivity to find out, hey, does the three work better right now? Does a two work better right now, or does the one or the four, right? You could customize your algorithm to your liking to find out what is going to be best for you when you're swing trading. Again, right? Price action can change. The sentiment of Bitcoin can change at any point in time. So you just have to make sure you use your tools as complements. You don't have to, but you might as well because it's going to make you that much of a better trader. You could take just the buy and sell signals and you should still be okay, but I highly suggest you use your tools. And it would give you a better chance at making educated decisions of trading. Make sense to everyone? Anyone got any questions? Any questions at all? Mm-hmm. Hello? Hello? Oh, yeah, I totally forgot about this. I'm so sorry. I forgot about this little baby. So, the slice matrix, right? This is just giving you extra tools because, to be honest with you, I rather make my charting better because if I were to add the RSI and I was supposed to add the MACD, right? It's just more stuff I have to worry about, right? It's like I'm looking at this now. My chart is just crowded, right? And instead of doing that, I could just have the direct information directly on the matrix. So the RSI 70 bullish, it's saying that the RSI is at 70, it's overbought. All I need to know, I don't really need to see this. I mean, you can see it as a visual confirmation, but I just want to know, is the RSI overbought? Because if I see an RSI level at like 90, oh my God, I better be prepared for like a sell off because getting an RSI of like 80 or 90, that means it's extremely overbought. And it will tell you, it will say extremely overbought or overbought, extremely oversold or oversold. It will tell you confirmation, and it will also let you know if the MACD is bearish, meaning is the orange line above the blue line, right, signaling a bearish trend, and it will let you know how recent was the crossover 25 bars ago. It will let you know. The volume is a good one to know as well too, because when you're trading, right, you want to know, is it a low volume day for the stock? Like if I'm going to Facebook, for example, on the 3 minute chart, I just want to know, is the volume decent? Is it average? It says low, less than the 30-day average of 5,111. If you're asking the volume, it's saying the volume of the current candle, by the way, not the overall volume. It will change every single candle, but it's supposed to help you understand, hey, am I fighting a low volume day? Because when you're fighting a low volume day, what happens? It's just flat, right? Price action is just flat when you're fighting a low volume day. And then the bearish below the 20 and 200 MA, this just helps you understand on the 1 day period that the 20 and 200 moving average is bearish. That means price action is below these moving averages to help you understand that the longer term effect of Facebook as of right now is bearish. That's what this is supposed to let you know. The volume is supposed to help you know when you're fighting in a range. And these indicators are here so you don't have to put them on your chart because I know some of you have limitations, right? So when you're a free member on TradingView, you're limited to 3 indicators at a time. I rather put indicators that I love, right? But of course, I mean, you technically can put whatever you want. I like to put the pivot point standards, like what Tiffany likes to use, because I feel like it helps, right? It could. Oh, sorry, not that one. Pivot point standard. But if I'm being honest with you, I made this update so that way you never have to touch that indicator button ever again to add extra stuff. because I wanted to make sure this is an all-in-one tool for you guys that you can use. But the pivot point standard, I like it a lot because it helps me find some like from Fibonacci retracement levels, like the S1s, the Ps, and the S2s. It's supposed to help me understand where price action can potentially hit and reject because it's very accurate as well because it hits this top level, rejects, hits S1, rejects all the way back up. The pivot point standard, I highly recommend. That's what Tiffany likes to use. But I wanted to make this update so you don't have to have so many indicators open at once because you're limited to 3 on a free account. Make sense? Or why I made this? Perfect. If you guys don't like it, if it just really annoys you, you could also disable it. So go to settings, go to style, go all the way to labels, and it will turn it off. Want to turn it back on, turn on labels again, and it will show up. But again, every single one of these buttons are responsive. If I wanted to take off the EMA, if I wanted to change any of these colors, you can, right? Spice trend color, I could change that. The spice cloud background, higher cloud color, lower cloud color, I could change it to, you could change it to whatever you want. You could even change the bar colors if you don't like it. Well, let me know if you guys can see this. I'm going to show you guys the documentation because I did update it. Can you guys see the spice docs right now on screen? Yeah, you can. Perfect. Okay. So I did update a lot of the documentation. It's not 100% finished yet. It's like 70%, but I feel like the most necessary stuff are here because we have a lot of questions about our Discord and how to navigate it. Actually, a lot of questions. So I completely redone the whole thing. Everything is fixed. Sorry if there's grammar errors. I need to run it through Elisa. But Spice Trades Discord and the hierarchy. This is very important because I feel like a lot of people don't know who is what. So I basically broke down who is what in our team. Founders, Blake and I. Analysts, that is like Syra, Tiffany. Anyone with the blue tag, like that means like they are an analyst. Anyone with the red tag, that means they are a support analyst. I did put an asterisk if they are okay for investment opinions, right? But anything, and but like we also have some different colors, like the marketing team, they're not trained for investment opinions. And then I also put not affiliated with Spice Algo Management if you're a member or just a spectator or viewer. So that's pretty much what it is. Getting started with Spice Trades, I also broke down what every channel is, not to in extreme detail, but I gave you a general understanding of what they are and by categories. So it's all broken down, where the Spice voice channels are at, what times we have typical meetings at, Trade the Open, Stock Scanner, what exactly they are, Trade Idea Scanner, Benzinga Squawk, where Charlie is on voice, locating our watch list, where exactly they are at, and what exactly each watch list is, and our scanners, right? What exactly everything is. I even broke it down like this. So hopefully you guys find some use for this. I don't know if anyone noticed it, but I did break down what exactly an AI alert is, what exactly each thing means, the referenced price, long meaning bullish, short meaning bearish, and an example of the price action after an alert came in. I even came up with the golden flows, what a sweep basically means, and some important stuff because I feel like this is a big question. What makes up the algo score? I put everything on here. Everything should be up to date. Not everything, but some stuff are missing. But you get my point. There's some stuff on here that you could take a look at to understand, like what is a green sweep, what does all this stuff mean. It's all there now. So hopefully this helped. The commands, data produced, Spice Algo definitions, what every single candle standard color means, by the way, because you could change the candle colors, but the standard colors, what exactly they mean, the sensitivity breakdown, the indicator, and what strategies you could pretty much follow afterward. How to update everything should be not. Sorry, I need to stop saying everything, but it is up to date to a point that you can understand how to use everything in our group now.